Well, good afternoon, everybody, and welcome to the United Regional Chamber of Commerce's update this week. We try to bring you some relevant topics every week. If you have some suggestions that you'd like us to cover, please don't hesitate to reach out to myself here at the Chamber or Dave Angel there at AACS. With the coronavirus and this pandemic going on right now, the mortgage world has kind of been turned a little bit upside down too. So today my guest is Jonathan Libman. He is a partner at the Tony and John team, their senior loan officers for RMS Mortgage. John, welcome. Oh, you're muted.
Thanks for having me, Jack.
There we go.
All right. Thanks for having me, Jack. As mentioned, residential mortgage services. I keep a license in Mass, New Hampshire, and Rhode Island, and my license number is 14174.
Well, thanks for joining me today. Tell us, are you a lender or a broker?
So more of a correspondent lender, which we have many investors behind the scenes, where it's kind of a blend of a broker world, as well as kind of your box lender that you mostly see. I would say the correspondent lenders is probably the majority of type of financing institutes you'll probably see in the residential purchase side.
And why is it advantageous to work with somebody like yourself instead of directly with a bank?
There's pros and cons of really all the entities you can work with. At the end of the day, it's really the relationship that you develop with your loan officer, as well as your real estate agents in a transaction. It's about the trust and ability to close in a timely manner, and really that communication. Sometimes we feel that one of the advantages someone can work with somebody like myself or the non-bank world is we're not always on the bank hours. And all we do is mortgages, right? So we're not really playing with the checking and savings accounts or things like that. So sometimes we can be a little bit more well-versed in it, as well as we do have to keep an individual license per state that we operate. When you do work for banks, you don't always have to have a license. So sometimes you can find more experienced loan officers in the broker world, as well as the correspondent lending world.
Okay, great. Well, have you seen your industry change since this pandemic?
Yeah, I think there's been major changes. I think the first thing is just the ability and that communication that you're having with someone looking to buy a home. We've been leaning on our technology a lot more than we ever have before. We've been fortunate to, have apps that we download to your phone. Like if someone's actually just doing a generic application, you would actually download an app right to your phone. From that app, people have scanning mechanisms so that you can upload securely, as well as there's calculators on there. And then actually people will actually sign their standard application through it. So that really helps, I think, in today's market where there's a little bit less face-to-face during this pandemic. But we also have the ability to meet people face-to-face if needed. But we've been finding that most people are actually comfortable staying away. And that's been a good option for them.
Well, how have you seen the process work when you're working with a borrower? How have you had to adjust your way of working with them?
Yep. So initially when someone's, putting refinances aside, if we're just talking about someone looking to purchase a home, a lot of times we're talking to somebody that maybe has never done this before. And when someone's doing that, usually have them fill out an application up front, and then we schedule a time to sit down with them face to face. So if we're sitting down with them face to face, that one part is gone, right? And through that, I think a lot of questions can get answered. So it's about having just that background and experience to know those same questions that would really come up in a transaction, or really that first-time home buyer will have when you're sitting face-to-face compared to on the phone. And that's probably that initial stage is probably the biggest part, because then you can educate them about the process before they really go out there and start looking for a home.
Yeah, it's a very forbidding process, when it was during our regular times. Now that you're doing everything virtually, it just makes it that much more difficult. How have you seen your real estate partners been affected? And how about the buyers, looking at homes, trying to find a home?
Yeah, I think one of the biggest things that we're seeing out there is that the buyer that is in fact looking for a home right now is more qualified, I feel, than ever. And they kind of have to be. They feel very comfortable with their job position, searching for a home. So the competition out there, you don't have as many of the tire kickers, just kind of, just, oh, wow, that's an open house on a Sunday, and they just kind of scroll through. That's really not happening that much anymore. because of this. I feel that your real estate partners are a huge piece of the puzzle now, that and the mortgage person that you're dealing with, because it's the trust on the other side. The listing office that is listing this property needs to know that, one, this person is qualified, they feel comfortable with the lender that they're working with, as well as they're comfortable with the buyer's agent that they're working with. And that's actually how we're even going to see a property. It's not a scenario where you have 30, 40 people just walking in an open house anymore. There's a lot of that trust before you walk in that door, because that seller has to feel comfortable that someone that is walking in their home at this moment could actually make an offer and close on that property, where in the past you didn't really have to show those credentials as much to just walk through the house.
Well, one thing that you touched on a little bit, but I'd like you to expand on, how important is it to get pre-qualified right now?
I think it's extremely important. One, I don't think you'll actually be able to get into a house to see it. I think that's the first thing. We're leaning more on the pre-approval side. We're running them through their automated systems through Fannie Mae and Freddie Mac, and they're issuing approvals to us. It's not always required to gather a lot of documentation up front. We try to explain to the borrower how important that accuracy of that paperwork is, so that they're looking in the right price range. Sometimes we can qualify for somebody for a lot higher than where they should be. So we also want to educate that borrower on their own budget. But it is it's really important for them to go through that process of being pre-approved or being pre-qualified, with myself or someone else in the industry, to just find out exactly where that comfort level is. That showing that to the agent gives them the comfort level to go and show properties in a certain price range, as well as that listing agent will allow you in that home.
Yeah, it's a tough situation. 100 years ago, I was in the mortgage business, and the stack of paperwork was yay thick, and it was FedExed back and forth. But now you say everything can be done, applications, credit checks, and everything can be done virtually and online.
Yeah, I think you're only signing a couple pages at this moment before you're closing, that are actually with a pen. Even your offer, your purchase and sale agreement that you're signing with the real estate agents, you'll see different websites. Dot Loop's a really common one you see with the real estate market. That they'll upload all their offers and things like that right through that system. So right off the bat, the borrower is already signing their offer they're making on a home electronically. Right from there, they've already done an application with us electronically, and they can actually sign that same paperwork through it. My entire morning this morning was actually going through disclosures over the phone or through a Zoom call or a FaceTime call with borrowers, or sometimes just on a phone call, going through the specific documentation that is disclosed to them, which is their formalized, they call it a 1003, which is the same term you remember, to go through that documentation with them.
Well, how important is it for young buyers today to maintain a good credit rating, and what's the best way for them to check their credit?
There's one is we in our industry, we actually pull a different credit report than a lot of those free sites that pull reports. If you were going to get a car loan or something like that, you'll actually see a different score generated. It's based on a different algorithm. I think the free reports are great. Sometimes your credit card companies and things like that can offer you a free report, or the bank that you work with. I think it gives you an idea of where it's potentially trending. But the credit score really is important. I would say one of the biggest things that credit score has happened is a lot of the government-based loans, when the pandemic really started, is we were down in the 580 world for a long time for your VA and FHA type of borrowers. And it shot up to almost 640, 660 down the board with a lot of mortgage companies and banks for a minimum credit score requirement during this scenario. Now you're seeing there's a little bit more comfort level moving forward. So you're starting to see the secondary market to start buy those loans again. And you're seeing that minimum credit score get down in that 640, 620 range again. I'm not sure how long it will take to get down, probably back down to those 500 range. But the credit score in general it weighs a lot on the type of financing or the type of loan product that we can offer. Some loan products are easier to get through the system. Some loan products, even real estate agents feel more comfortable with because of appraisals or conditions of the home. And it also, depending on how much you're putting as a down payment, can also affect that mortgage insurance quote too. Remember, lending is based on risk, right? And based on what a credit score is, it kind of leans on how risky you might be to pay that on time.
Oh, okay. Well, how can you see with this pandemic the adjustments that you've had to make in your industry, and what other adjustments do you think you'll have to make moving forward?
I think one of the biggest things I think that people have found is the value of home ownership, right? Either a condo or a single family house or however it's set up. During these times where we've had to be quarantined and stayed at their home, I think they are seeing that value. So I think we're going to see a lot of people, when all this is over, start to come out of the woodwork that maybe wanted to live in the city and they always loved living in the city. And we're going to start to see them move back down to the suburbs because they are seeing that value of maybe, potentially having just a yard to play in, with their kids or something like that. So I think you're going to see that. Also, in certain cities and certain like the Boston market, the people in my position didn't always meet everybody face to face. It was more of a streamlined situation where it was more on the phone, things like that, because it's so difficult to get from one place to the other for a 20 or 30-minute appointment, right? So it was done more through the virtual type of ways. So where I think we're more just developing more of what they were doing already in the city in certain positions that we were doing.
Okay. Well, we've seen the stock market go up, down, sideways, every which way. But with the recent rate drops, have you seen this a little help in your field in the activity that you're seeing?
Yeah, I think there's obviously always concern about what the rates could be like in the future, as well as the housing market, and that's it's all based on opinion there. But in general, we've been able to have a slight dip in those rates, over the last couple months. It's definitely kept our industry very busy. There's been a lot of people that are in situations where they've been able to take advantage of refinancing. With that, save on a monthly basis, potentially getting rid of mortgage insurance. We're seeing a lot of appraisals getting waived internally in the systems. I think that those potentially could have gotten tweaked. Because a lot of the appraisers are going out to the homes a little bit less than we're seeing in the past. In general, I think that the industry in general is that's kind of it's tough. I think we're seeing the rates have definitely made a push to that buyer that may have been sitting there and saying, wait, I might be able to get a rate down in that range for a 30-year fixed loan. I think there's a lot of attractive, it's very attractive when you see that, where maybe you might be moving forward, 6 months ago, that same rate may have been 0.5% or higher,
All right. What advice would you give for somebody who's just starting the process, who, okay, they've saved a few bucks, and maybe it's time to move out of that apartment and they're going to find a house? What are the first steps, 1, 2, 3, let's say?
So, mortgages in general, I always kind of think of it as in 4 basic things, right? It is like think of it as like an oak tree, right? You have the base model it's based on credit scores, it's based on down payment, it's based on employment history, and it's based on a debt to income ratio. That's how we qualify every loan, based on what someone's credit score and down payment, employment history, in that ratio, it's going to have all these branches off of this tree. And that's going to tell us you may qualify for 2, 3 different programs, right? So that's the first step, is to kind of look at, do you hit those criteria, right? The next thing, I really strongly believe in the budget. If you've never done this before, grab your bank statements, grab your credit card statements, grab whatever you're paying for rent, and start breaking down the number that you're going to be comfortable with on a monthly basis, right? Especially if you were considering those taxes and insurance when you have a mortgage. There's a lot of, I think, misguided information out there that says it's cheaper to own than rent. Maybe if you're debating the principal and interest payment, but when you add the tax and insurance into this payment, usually is a little bit higher. So it's good to know that blend on your own budget to find that comfort level. Because when we're qualifying you on a debt ratio to say, hey, this is how much you can qualify for or up to, we're basing it on your gross income, not your take home. And we're also basing this on what populates as non-cancelable debt, which is on your credit report. So debts that are not counted in this, which would be counted in your own budget, is, car insurance, cell phones, gym memberships, food, electric, gas, could be daycare, things like that. Those are your own budget. And this is something really to consider when you're breaking down. It's better to come to someone like myself and already know, look, we don't want to be over $1,500 a month. We really don't want to be over $1,800 or $2,500. Knowing that number, and then also asking around, checking out reviews, doing a little stalking online. That's why we have people do reviews. I think that's really helpful when you link up with somebody like myself, and then you build that trust. A lot of times we connect through a real estate agent. The borrower first go on potentially a website, or just kind of ask around, connect with a real estate agent, and they may say, hey, call my guy. And that's how you would connect with someone like myself or family and friends.
All right, and folks like yourself, you have a whole team behind you. You have a whole group of realtors that refer business to you. I'm sure that you must have some appraisers, some folks that can do some repair work. Things. You have a full team?
Yeah. So the way you see it kind of being put there, the Tony John team. So I have a business partner. His name's Anthony Raby, so Tony, and hence Jonathan John. When we got into this about 16 years ago, we grew up together, and we teamed up right out of college. And it's been about 16 years now. We have 2 junior loan officers on our team. We have 3 licensed assistants. We have a front admin, and then we have 2 processors as well. We have a full team. It really helps in make this a smooth process. So everyone's always hands on deck. So if it is a Saturday at 6 o'clock or 8 o'clock, and you reach out in an email, someone's going to reply to you, and that's really important in our industry because one, educating the person, because when you do look to make an offer, the process is really fast, right? And the more you know about the process, how your comfort level was with these payments, you're gonna be able to make a faster decision in order to make that offer. And you need to trust those parties behind the scenes in order to get you to that finish line. There are things that do come up in a transaction, such as, we might need a paint job, or something's damaged and things like that. And we have those connections too, just by being in the industry. We have a lot of those tentacles out there. We have a lot of relationships, such as insurance people, attorneys, things like that, where we can link you up with that are trusted sources that we've dealt with in the past.
Right, and that's where it's very, very important, especially when you've got some young folks that are just getting into the market. They're not familiar with all of these things. Jonathan, thank you very much for joining me today. We really appreciate it. Now, just real quick, tell us, your office is in North Attleboro?
Yeah, so we have a couple. We have many locations. I think we're right around like 78 to 80 locations, I think, right now. I'd have to confirm that on the website. But I work out of my North Attleboro office the majority of the time. But I hop around some of the other locations depending on where that person might be able to meet, just for convenience. It's really nice when we have a lot of different locations. We have an office right over in Easton as well. I use that location a lot, especially working with anyone from like the Rainham, Taunton areas. We like to meet in our Easton office. In North Attleboro, I'm actually, I was up here in New Hampshire this week with my family, and I'm actually sitting right now in my North Conway office, right? So we are able to use a lot of these locations. It's all owned by one entity, so everyone's willing to share, and we're able to get some keys. So it really does make it a smoother process for anybody involved, where that someone's easy access to get to.
Awesome. Well, John, thank you for joining me this week. Folks, thank you for your time today. And if you find a relevant subject that you'd like us to talk about, shoot an email to me, Jack at the United Regional Chamber of Commerce. Go to our website, follow us on Facebook. That's where all of our updated information on this pandemic is going, resources for some of the small businesses. Matter of fact, we just put one out there, customizable flyers, so that you can have them ready for when it's time to reopen. But again, to Dave Angel and AACS, thank you very much for doing this for us every week. And we hope everybody stays safe.